It's recording going. Can you hear me now? I didn't have my mic on, so it made sense. Yeah, okay, cool. Welcome. Here, let's just change my name in here so you don't get real confused. Boom. All right. Audio is good. Screen sharing is good. Recording is there. Let's pull this up. Okay. So what I was telling Nick that I want to do, I want to cover a few tickers, especially Apple and Google that I still have positions open in, and then a few other tickers, and then I will let Nick take it from there. There are a lot of tickers that people are requesting. I don't know if we're going to be able to get to all of them. To like accurately chart something could take 10 to 15 minutes. And I do not expect Nick to be here all day. So we're going to try to do the best that we can to get as many of these covered for you. So let's start. I got to hide this chat here with our basics. So like I was telling people before the meeting really started, we're going into a week with FOMC. So when we do this, it's difficult to hold trend a lot of the time, right? So any setups that we see today before market open on Monday might not exist after FOMC minutes are released. So this week is usually a week where we start to see a lot of consolidation leading into the press, I guess all of the press and information that comes with a week like this. So this is, and I'll say this over and over again, every time this happens, it's a week to size light, very light, because if you are wrong, the market has potential to move very rapidly in the opposite direction of what you're anticipating very quickly. So everybody keep that in mind. On the shorter term, we are looking at an uptrend. If anybody saw the news going into, I think it was Friday afternoon or Thursday afternoon, we're officially, for at least a second, pressing out of a bear market and flipping into a bull market. Now, for me, this doesn't necessarily mean a whole lot other than, people are starting to catch on to the longer term directional shift that we had from around March. March was the last real bottom that we had. And then we started to move up. As you can see on the SPY chart, there's a lot of consolidation between March and April was relatively flat. And now we are starting to make the next leg up. So SPY overall, what I'd be looking to hold at the very least, we need to stay above 425, right? So the bottom that we had in pre-market. And if we can hold above 425 through the end of this week, I would anticipate next week we will keep pushing up. Now there is potential for us to move well up and through this, assuming that the minutes release is, advantageous to what we're looking for. But what I was looking at when Hassan and I were on voice chat on Thursday, I believe, or no, it was on Friday morning, was that we touched the last isolated high that we had on SPY over in 2022. So just at the start of Q4. And that was right around 431.7, right? So Friday morning, we came up, we wicked through it, and then we immediately started, you can see this here, immediately started our downward trajectory. So this is where I was saying, hey, I don't know if we should really long up at the top. We were approaching this isolated high. Now, a lot of the times when we go up and we test highs like this, we will expect a pullback, right? A lot of the times, especially when it's been so long that we've had to wait to get back up to this level, it's very unlikely that we're going to immediately break it. So I would look to, hopefully, if the FOMC minutes are great, we're going to be over this by the end of the week, but I wouldn't really anticipate breaking and holding over 432 on SPY until we get to Thursday. I could be very wrong, but that's just kind of what I'm looking for. From there, I really don't like the idea of shorting the market immediately on the touch, right? You can see that we have a bunch of higher lows consistently, as well as higher highs. So this area from that March point all the way over to where we were on Friday is still in a technical uptrend, right? So when we are in a technical uptrend and we still have momentum, we're still near the very top of it. I do not like the idea of trying to short yet. I will go short on everything if we start to break under 425. That is really where I'm at. And if I don't anticipate SPY, while individual tickers might move, I don't really anticipate too much movement on SPY up until the FOMC release. So longing is going to be kind of tricky here too, because if we're already near the top of the range, I don't anticipate the breakout and I don't want to take anything short yet. I probably will stay away from SPY up until the FOMC release. So just this is a general lay of the land of the S&P 500. So again, that is the top 500 stocks that we are watching here. So this is a good way to gauge the market as a whole. As a whole in the US economy, we are looking up, but I think this week will be a little bit of consolidation. So moving on to things I have positions in, I still have a lot of my Apple 190 call for the 23rd, and I still have all of my Google 130 call. However, I did mention that if people wanted to cut the Google call on Friday for break even, they could have. We hit a high of 15% on the Google call and a high of 73 or 74% on the Apple call. I was a little bit upset that I missed my Tesla play from 30 cents that went to almost $30. So I decided to hold these a little bit longer than normal. However, people with smaller accounts should definitely be trimming when you are up 70% on anything. So Apple, if we look and we start to zoom out, our weekly still looking relatively strong. Yes, we did end Friday red, but the weekly is still looking like there is more buying than there is selling. We did close slightly below where we opened. However, this pretty much brought us back to the close of the previous week. So you can see that we started not last week, but the week before around 177, and we closed at 181. Now we closed Friday at just under 181. So we didn't really see much movement. This candle looks like a lot, right? Because we had a small gap up going into the start of last week, but I'm still relatively bullish on this. Overall, I think the fact that we closed right where we closed the previous week is a good sign. This also coincides with some of these other isolated highs from December-ish. So these are the weekly candles, don't forget. So I'm okay with that. Still holding 190 on that. It's not a big move. Apple's been making relatively large moves on the daily. I mean, you can see even here from pre-market, we're hitting 4 points, 4 points, 3 points, and then obviously on the 5th we had a 6-7 point move. So I think that we have 2 weeks left. We'll have about 13 days on Monday, I think, remaining on the contract. So 12 days. So we'll be good to go there. For Apple, what I'm looking at, again, the way that I've been doing this is just isolated highs on larger time frames. So we can see I would like Apple to hold at the very least 180, 180.5 for me to remain like bullish in the shorter term. I think that this is where we start to inverse, right? So you can see that if we drag this over, this is the same level kind of held on the 2nd, rejected on the 6th, came up for the high candle close on the 7th, then pushed back down. This is the level that we were trying to break out of on the 8th. And then we didn't really mess with it too much during actual trading hours. We didn't mess with it at all, but during pre-market, we definitely saw a little bit of action there, ultimately came back and held. So main level for me right now is that 180.5 for Apple. In terms of what I would be eyeing for upside levels, it gets a little iffy because Apple has been pushing very, very hard. And if we see on the weekly in the last, 3 years, so forever, we haven't really been up this way, right? So there's no real levels to play with over, I mean, even right here, 181.2. So this same spot on the weekly. So we're holding up and we're pushing and we're near the highs. This is where it gets a little bit tricky to start drawing levels. You saw it with NVIDIA. It's like after we had the earnings beat and we absolutely ran. We got to a spot or a point in time where there was no real information. There was no way for us to judge, well, where are we going to find buys? Where are we going to find sells up in this level? There was no history there. Similar to Apple. So all we can really is a isolated high and kind of play off that, right? So levels in this instance, we'd be looking at 181.75. Again, the 180.5 and probably 181.2. So this is really all we have for levels. There's a slight bit of consolidation around, what is that, 182.6. But everything else, there's not enough information to know if any of these are going to be actual levels to reject, levels to hold. All I'm caring about is something that I have seen in the recent period of time, holding or rejecting, which again, 180.5. So still overall bullish on Apple. Weekly shows it. We'll see what happens Monday. But yeah, this is the lay of the land. So 185, 182.6, 181.8 ish, 181.2, and then 180.5. So this is kind of where I'm at. Again, when you take a stock and you are at highs, it's a different game entirely than something that is trying to break up through existing price action. So moving on, we're going to check out Google. So I am still holding Google because I feel like in the sense of tech, it was kind of lagging behind the last couple of weeks. Everything else was running, while you can see it was very much getting beat down. The only thing that I kind of was thinking of that I wanted to hold is the fact that it held over 121.8. Again, this is utilizing kind of the isolated highs. It is a little bit choppier than Apple's price action, but we can go over. So we see a strong isolated high right around 121.8. This is from 2021, which was then still respected multiple times in the more recent area. Most recently, what's this? End of 2022, and then we came back up the first week in May, or sorry, the last week in May, and also held. So I'm looking for a hold up here. If we open and we start to get under that on Google, I will look to cut my swing position. However, the consolidation here is kind of interesting to me, right? We have a massive move down, and then we just can't seem to go any lower. So I think from here, we are going to get a relatively large move in one direction or the other. The weekly says it is looking down. I think that it is possible that is a fake out, because we are still during trading hours, for the most part, having higher candle close lows, except for midday. So even that held right where our close level was the previous day. So still bullish, but definitely a little bit more hesitant than I was Thursday. So we'll see how this carries over. Main levels to look at here. These are mostly closed because it's just so choppy. There aren't really many isolated highs on larger time frames. Everything's kind of all in the same spot. So I would love to see us open up over 122.5. If we end up breaking this pre-market from Friday and going down any lower than 121.6, I will definitely be out of Google and we'll be looking to short it. But for the time being, this consolidation seems to be holding. Upside, again, everything had a big dump on the 7th. Everything came down relatively hard, so it is a little bit difficult to judge where I'd be targeting for upside. So all I can really do is look at 123.23, again, where we came down and rejected on Friday, and then Friday's high of 121.75. From there, I think that there's a lot of possibility for this to run very high. There's not a lot stopping it, right? We had a massive dump, which usually can get bought back up pretty quickly. So from here, if we do happen to break Friday's high, I will be looking at a price target of 125.34, because we currently have the 130 calls. If we get up there in the next few days or right after FOMC and still have more than a week left on this contract, we should be up over 100% pretty easily. IV should start to kick in. But for now, this is just a hold and wait. I would not enter into any Google position if you have not already taken this with me. So those are the two that I really have. And then the overall market trajectory for SPY. Things that I would not like to see people try and do this week. Take Tesla for no reason, right? We know we had a massive run. Like I've been long on Tesla since the 25th of last month, which, as it turns out, was actually a really great spot to start to long it. Now that we have broken highs, now that we have had news related pumps, I do not want to see anybody randomly try and jump into this. I think Tesla could very easily come back to the 230 level before we see another push up. So just be very cautious if you are taking something like this. I don't necessarily like it from a swing perspective, given the volatility from Friday. So that is one. And then I think the same can almost be said with NVIDIA. It looks like we might be breaking out of a bull flag. I'm still a little hesitant on something that has pumped so much, right? Like, so we had the earnings beat and it's been now 15 days of consolidation, right? So I'm still a little hesitant on taking either of those two, but I know that there will be other things in the market. So Nick, if you want to hop on, I'm curious to see what you are actually personally watching going into this week.
Do you want me to share my screen?
Yeah, here, I'll let this go for you. Should be able to share it now.
Yeah, there we go. So for me, the main thing that I'm going to be watching is going to be Amazon and the purpose behind that. And I'm going to get into the other people's stocks that they also said once you get off. But with Amazon on the daily right now, obviously the whole market has been in that resistance level, like just like Jarvis was just talking about with the SPY rejection from the previous lower high from the all-time high. Amazon is also at a heavy rejection zone that used to act as a heavy uh, resistance. And once it broke above, we tried to hold with a bounce, obviously. And if I extend this to a larger frame, the biggest thing I was watching, and for the ones that have been in the charting sessions for like the past weeks to a few months, this falling wedge of the lower highs and lower lows on Amazon, I've been basically telling you guys it's going to break out eventually. We're going to push up to the 120s. And that's currently where we are at the main rejection that I have. So just like with SPY, I'm not going to be in a rush to play Amazon, just like how Jarvis was talking about with Tesla and the video as well. Everything has been pushing, so you don't want to just buy in blindly and just expect, oh, we're going to keep being bullish on the upside. If we get a relatively good pullback on basically every stock all around, Amazon's in the spot that a rejection could claim almost a 5 to 10 point drop before FOMC or during FOMC and CPI as well. But the biggest pullback I want to see, this engulf we had on the daily, I can't zoom in very tight because of the Weeble crap that they have, but the engulf red candle we have on the daily, if we can get a pullback to the 120 or even slightly below that, to that 118 to 119 area, that could be a good entry point for Amazon if we have reasoning behind why we want to enter that. And honestly, outside of Amazon, Ford's been my main watch, but the move has already happened on this. So I'm probably not going to be anticipating any new entry on this since I just closed my runners on Friday for this position. But the move that I talked about with you guys, I'm always looking for the bottom entry for the upside. If I'm buying calls, I want to catch a bottom point off of a higher high trend, off of major support, a double bottom. The entry we had on Ford almost 3 weeks ago was this purple highlight on the double bottom. I caught it the day before it broke out, and then obviously we had the major push. We had the recontest of the trend line. We broke back inside that symmetrical triangle or the sideways wedge, and then broke out on the upside. At this point, when it comes to plays that I already sold for profit, I'm not really interested in jumping back in out of FOMO or out of the hype. If you're looking at Ford on the 4 hour right here, we're in a very massive rejection zone, just like how almost everything in the market is. I don't want to chase or try and play Ford right now. When my initial entry was basically at the $11.50 area, Ford's up basically $2. And if you don't really understand percent gains on stock shares, Ford moving $2 is massive. So I'm not interested in trying to catch the next pump on Ford. I'm more so going to monitor this and just see what the rejection is going to be at this 1350 area. But outside of these two, I'm personally not going to be watching a lot of stocks. I don't want to put too much on my eyes, to be honest, with CPI being this week. Anything can happen before then and also after. So I am going to take the overall market sentiment and use that for my implements, basically.
Nick, sorry to cut you off. Did you see the ES gapped up? Like
Was
on the
that
new on the new contract rollover? I'm just looking at it now. It gapped up like 50
oh
points.
yeah, that happened. Everyone was freaking out.
All right. Well, that might change things a little bit. I'm curious to see where it falls in relation to SPX because ES contracts can either be above or below SPX. So when we open on Monday, I'm going to reevaluate that. Sorry, I was just going through all this stuff and that kind of I saw Emilio talking about it, but I thought he was just saying it was going to go there. Not that it currently is there.
Yeah, that I think it was either Thursday or Friday that happened too. It gapped up almost, I think, 44 points because of the contract change. But yeah,
Yeah, that's interesting.
if you don't mind, you want me to start getting to the stocks that
Yeah,
people.
man. You do you. I'm gonna fall back here. So I will be listening, but I'm also going to start cleaning. So take it away.
All right, sounds good. So just like always, guys. Oh wait, hang on. Would puts on forward be a decent idea if it's at a big resistance area? So Jordan, the biggest thing, I don't want to say the biggest thing, but and here, let me actually turn my camera on. I don't know if you guys want me to or not, but I figured I should. There we go. So the biggest thing with playing a quote unquote huge rejection, quote unquote huge support level, nothing is 100% guaranteed with stocks or trading, let alone anything in life, honestly. So when playing a position like how Ford is in right now, and or Tesla, Nvidia, Amazon, whatever you want to look at, you have to understand the risk that's associated with any position that you try to enter based off, oh, we're at a rejection, this has to come down. So the reason I'm not even thinking about puts is because I wrote this up on the upside. I don't want to try and just predict a rejection back down because I do have level clears at the 14 area, 14.20 a share, $14.70 a share. And then the major gap fill that I'd like to see is roughly around $16. I just don't want to try and, I don't want to say predict, but put myself in a position of I played calls on the upside. Now it's time to play the downside because we need a retraction, we need a pullback. It's very hard to really decipher what's really going to happen with the position. So when it comes to forward, ideally risk to reward, the risk for getting puts where it's at is a lot lower than the reward for getting puts, obviously. But you also don't want to just use that as your determining factor to make a position out of it. I would wait maybe a week or so to see how Ford reacts because for those of you that may not know how Ford works as a stock, it does not move very fast when a breakout happens. Because once it has that move and it finally settles out at a rejection zone, or if it pulls back to a support, it likes to zone for a while. I mean, if you look at a lot of this movement that Ford has had for 2 to 3 weeks straight, it will just basically zone 50 cents up, down, up, down. Before the major breakout, when I was tracking this, it was almost a month and a half straight of nothing but 30 cents up, down, up, down. So now that we're at this position of that $13.70 area, I don't just want to assume that we're going to have to pull back to a certain point. So that's the reason why I'm not really thinking about it. But if you want an answer to that question, risk wise with getting puts is a lot lower compared to calls, only because naturally we need a pullback to get buyers that miss the push to buy into forward, if that makes sense. Personally, I would not recommend trying to catch a rejection, if that makes sense. So I'm gonna start with AMD for you guys. I'm gonna kind of speed through this since you guys did mention a lot of stuff. And when we get to the end, type stocks that you want me to look at as well, because I saw there was a list earlier. Someone typed in the Zoom. I have not added those to my watch list. So if those want to be looked at, just retype them or just specific ones that you really want to see. So starting with AMD, going back to last week, the charting session, I was telling you guys there's not much of a position with this unless we fill the gap down to the 109 a share, or if we break the upside at 133 a share. Literally for the past week, AMD has just been zoning, just like I told you guys at May. That 118 a share area was the main support before the breakdown on the downside, and we've just basically been hitting up, down, up, down. So we're still in the same position with the same levels for AMD. The main support at this point, with it pushing to the upside slightly with a double top on the smaller frames, a pullback to around 118 to 120 a share. You want to try and catch buying pressure holding it up if we pull back to this area, which is the yellow highlight I have. If we can hold here on a pullback, obviously that's going to show strength for conviction. If you want to buy calls at the top, you can, but the issue with that is if we don't push and we just consolidate, or if we reject and drop back down, calls are going to get demolished. So you don't just want to assume, oh, AMD has to keep running. It's been waiting too long. Like a move has to happen. You also have to understand we have a heavy rejection around 132 to 133 a share. So you don't want to force a position just based off the fact of it's a heavy bull flag, heavy consolidation above 120 a share. You have to understand that like retraction and pullbacks may happen this week, depending on CPI and other stuff. So I'm going to switch over to Boeing now. This is a stock that I was watching and I totally missed the breakout because I wanted more of a pullback and it never happened. I was looking at the 203 a share area for a pullback for support. But if we're on the daily for Boeing right now, we are once again, just like every other stock, if you're starting to see a trend with everything, we're at a heavy rejection. Price action right now for a lot of stocks is at heavy rejection. So with the news this week and CPI, FOMC, PPI, that data is going to give us the direction overall in the market. I honestly don't think, like what Jarvis was saying earlier, not much is going to happen tomorrow, maybe not Tuesday. The biggest issue, everything is at a point where anything can happen. There's no, oh, a breakout's going to happen. Oh, a rejection's going to happen. You're literally like gambling if you try and predict what's going to happen before the news results. So when looking at Boeing, literally we're at a rejection. If we do break out of this 217 to 220 area share, the next rejection is going to be roughly around where the highlight is right now for a gap fill to about 230 a share. Not saying it's going to happen, but that's the gap fill that will take place if we do break out of this massive bull flag that's literally been forming for about all of 2023 from what I see. So just going back to the 4 hour, I want to break down to you guys what I personally like to look for, and that's pullbacks for a better entry for calls. When looking at all this chop, it's very deceiving to the human eye if you're just looking, trying to find something. So you want to try and see a pinpoint area where a lot of rejections and or support are hitting at the same place. So where this white highlight is that I just put in, if you use this zone, yes, it's like the middle of this consolidation, but focus on the individual spots within this area. We have a lot of rejections. We break above, yes, I get that. But every push above in this area where my highlight is, we pulled right back down into the downside. Once we broke above, we did try and hold with a support zone. But as you can see from this massive red candle, drop down. Once we push back up, now we're rejecting that same zone again. Rejections. Now that we're above that price action, my entry point that I wanted before we had this new support, as you can tell from this area right here, I'll make this purple just so it's standing out for now. I was hoping to get a pullback to that 203 a share where this dotted line is. It never happened. I think that was Monday. Tuesday was a pullback, then Wednesday and Thursday pushed up, Friday kind of just sat. I wanted a pullback because the way I trade, I like to get calls at heavy support. I like to get puts at heavy resistance. I don't force the play. I look for a pullback with heavy buying pressure, volumes increasing, the zone is holding over multiple 30-minute or hourly candles. I don't just buy based off we touch the zone, I have to get in. So we didn't have that pullback, so I totally avoided Boeing. And sure enough, we pushed to the main resistance at the top of this quote-unquote bull flag on the daily or just heavy consolidation. I'm not going to look for a breakout play. I'm not going to look for puts on a rejection here. I'm just focused on volume on Monday and Tuesday. What's the tape looking like? Is there going to be a slight pullback to at least this area right here, which would be a nice support zone if we hold on a pullback? The reason I have this as a nice support is because when looking at this from historical areas, we had a rejection. We broke above, but heavy rejection. So now that we're above with price action, that historical rejection is now going to act as a floor for a new support. Support before, I had it 203. Once that didn't break, the next support was around 208 a share. Now that we're up at the resistance, if we can hold 214 to 215 a share as a support ground, Boeing could have a nice run up into the following week or even to the end of June. So it's important to follow this stuff and not just blindly enter and hold, hoping it continues. You want to get the best entry possible. So switching over to Baba now, this is also another one that I have been watching heavily, and I do feel very bullish on Baba for the week and or the week after, the rest of the month. The setup is very valid right now, and yes, we're making lower highs, but we're also holding a heavy support at roughly $80 a share. When I talked to you guys about this last week for charting, I was telling you how if we have any pullback, and let me highlight the start of the week just so you can see this without having me talk about it every time. So this white highlight was Monday last week. I was telling you guys that I wanted a pullback to the support down to $80 a share. If we could hold 80 and then push back up, that would have been my entry point. And sure enough, we did not break downside. We held and just pushed and consolidated. So at this point with Baba, the biggest thing I'm focused on is a break above this trend line of the lower highs. I want to see a break and then pull back to that support, which right now it's resistance, obviously, the 86.8 a share. I want to see Baba break out and pull back and hold this as support and then make that next leg up. I'm not focused on buying and holding. I want to get the best entry possible where risk is in my favor if I have to cut early for a small loss. I don't want to have a risk being a 70% loss on a contract. So I'm waiting for this. I want to see a breakout and then pull back to the support because as of now, it's a heavy rejection. If we do pull back and hold, that's when you focus on trends are going bullish. That the lower highs are now invalid, and we're starting to make a new trend of a bullish standpoint on the smaller frames. If we do hold these trends, we break out above the $86.80 a share and pull back as support. You have to watch the previous lower high that formed off the larger frame trends. This will be a rejection zone. If we break this, it's around $91 to $92 a share. The gap fill is obviously going to be up to the next area. It's a level game. That's all this is. So we're focused on trends to hold. If trends can hold, we want to break above the $86.80 a share. I'll pull back to that hold as support. And then we want to fill the gap up to 91 to 92 a share, possibly pull back again. And just for a visual, I'll do this again. So we want to see a break, pull back to that support, push up, pull back to that trend again, and then make that gap fill to the upside. You want to see trends reverse. As you can see from earlier, we had a bearish with lower highs and lower lows. We're forming that new support on the bottom. Having this new support, we're forming a bullish trend to reverse on the upside to make higher lows, higher highs. That's what we're looking for with Baba this week and the next week. So I'm on Chevron right now. And for those of you that may not know, Chevron is in the energy and oil sector. So stocks like this, which for me, I don't like to waste time on stuff that I don't see a clear entry or clear rejection. A lot of stuff is in places that you can't really do much with it. So I don't want to just talk and ramble about stuff that I don't think has a positive entry and or setup. Chevron right now, if you're looking at, I'm just trying to find stuff to talk about with this. We had a lot of rejections right here. This level around 158 a share. We're currently above that, but pushing back downside. If we switch to the 4 hour here, we're practically hitting a double top right here on the smaller frame. We had this massive gap down. Now we're holding a support, trying to flip on the bullish side. We have to hold on a pullback around 155 a share to keep this gap holding. This is going to be a gap fill to 155. If we hold 155, trends are going to form on the upside at that point. Also, if we pull back, we have to realize the breakout around 160 a share to 161 a share, that has to happen for a bullish transition for continuation with the Chevron. Outside of these two main levels, I don't really see much to talk about with this. So I'm going to end this with, let me color coordinate these real quick. So the main support that I want to see hold if we break on the downside is 155 a share on Chevron. If we push upside and break 160 a share to 161 a share, just like with Baba, I want to see a stock break out and recontest that price action level. So a resistance flip to support, I want to see that hold. I'm not buying the breakout and then holding. My style isn't like that. If that's how you like to play, that's perfectly fine. I like to see a resistance flip to support and then hold that on a pullback to make my entry cheaper for the contracts. And then I'm playing the next leg up at that point. So when putting trends on this chart, then it will form something like that. And if it holds, it will hold a support of 160.6 a share, holding the trend, and then push up to the upside even more. So that's the kind of stuff that I look for with breakouts and a recontest of that zone. So now I'm on Disney, and I'm on the daily chart right now. So just like with Chevron, Disney is currently trying to get that bullish momentum on the upside. If you guys are looking at the highlights I have, the white is basically the new support that's forming. I was expecting Disney to have more of a pullback to like 84 a share, but we kind of held that 87 to 88 a share. Now that we're pushing upside, we broke this yellow, which was another resistance, because when I charted this for you guys last week, we were in the brink of that rejection zone. So now that we broke above, just like I've said earlier with every other stock that is forming for this kind of breakout, I want to see a pullback and hold this $90 to $91 a share as support and curl on the upside. Just someone just said, I totally agree with Chevron, doesn't really have a clear entry. Stocks that don't have clear entries, don't think you have to like, oh, it's in there, I have to find it. If a stock doesn't have an entry, find something else. All you need is one stock to watch all day, and you wait for that alignment. You don't have to force a play because, oh, like I know there's something there, I want to catch it. Find a setup that you can visually see and that visually aligns with your style, your pattern. Don't just force a trade because, oh, I like Chevron, I want to make a play on it. If there's no play, let it sit for a week or two and go back to it. You're not going to miss anything. Every stock has this kind of stuff. So like with Disney here, I want to see a pullback to that 91 a share, $90.50 and hold. Because at that point, if we do, the gap fill to the upside, it's basically a cup and handle forming right here, kind of a head and shoulder, cup and handle. We're going to get this right shoulder forming and possibly curl to the upside to touch about $95 a share. If we do breakout on Disney with that area, the gap fills are just going to align as we go to this right here. So we have a fill. Let me put some lines so you can visually see the price action numbers. So we have a level at 94 a share on the upside. And then the next level I'd like to see clear and or just touch is roughly $97 to $98 a share. And that's like the play fill, basically the gap fill. Like I was saying earlier, before I would enter Disney, if I play it, I'd want to see a slight pullback to this yellow highlight. If it does hold there and start to curl, I would enter calls at a few weeks of time possibly. But if you want to be risky, you can play week of, just understand the risk. Upside levels at that point, if $91 a share holds, we have $94 a share for a resistance, and then the gap fill on the upside is around 97.7 a share. Just a question. Let's say you sit there and wait for some news like the Russian drone attack that crashes the market. Oh, I lost it. Where'd it go? Oh, my bad. There we go. The Russian drone attack that crashed the market happens and all stocks start to sell off. Would you still buy at your level or wait for some more? So the biggest thing with news releases, it invalidates all chart setups. That's the biggest thing a lot of people don't really consider. If news is that severe, charts are literally out the window. It's all fear. You have to understand how news correlates with charts. Is the news played in? Was the news out of nowhere because it was a natural disaster or a war news? So I'm not really interested in playing stocks during news releases, if that makes sense. Because a lot of stuff, like I know you guys saw the thing with the AI generation of the Pentagon getting blown up. There was some explosion. It was all fake and the market reacted. So even with the idea of fake news, and also charts don't always work out when news is released. So I don't really want to play stuff based off a major news release because it invalidates everything at that point. So going over to Microsoft, this is going to be a very short and simple explanation because we are also basically going to be touching all-time highs pretty soon on Microsoft. We didn't hit the all-time high this past week, but we basically contested it. We got very close to it. I've been telling you guys, I don't play breakouts. I don't play all-time high breaks. I want to see how it reacts to the price action and then play off of that. And then I told you guys last week in the charting session, I would love to see the 320 fill the gap on the downside before I even think about calls. Microsoft hit that on open on Thursday. I was not watching Microsoft. I was interested in other stocks, so I did not see this happen. At this point with Microsoft, the biggest thing that I'm focused on, I know from the larger picture, this white highlight is around the all-time high area. I think the all-time high is like $344 a share. I'm not focused on calls with this. I want to see how it reacts when it pushes back to $338 a share. If we do pull back again to the 320 and hold, you can play calls as long as the buying pressure is there, the support can hold. That's all that matters at that point. With Microsoft being close to all-time highs, I don't want to speak too much on it because there are better possibilities out there. If you like to play breakouts, I would focus on Microsoft for your personality of a trader. So switching to Nike, and I saw someone said snow. I'll get the snow. I'm going in alphabetical order, so we're getting close to snow. So with Nike, this is also a larger time frame charting that I've been telling people about for the last few weeks or so that I'm still waiting for this to align to my personal liking. I want to see a pullback to around $101 a share as a major support. This has acted as a support on Nike multiple times. I understand the fact of, well, it broke down here, so why is it a strong zone? Zones break, but when they break, when do they recontest? How does it react? When it breaks downside and then pushes back above upside, does it hold on that retract? Which is exactly what Nike did here. When we pull back to this area after breaking upside, it holds support. If we go back a little bit more, before we broke the downside on this, Nike was holding this support massively. Every time it dropped down, massive green candle, massive green candle. Every time that happened. So what I'm focused on now with Nike, I'm going to switch to the 4-hour. I want to see us slowly curl at this $101 a share. If we pull back a little bit more, it's more validation for me because now we have a double bottom. If we wick on the downside a little more, don't think of it as we're breaking support. Think of it as a liquidity grab for hedge funds and market makers that may be watching this. You have to understand they play to wick out retail that has stop losses, or they know the zone is here and they want to get people scared out on the smaller frames. When looking at this on the daily or the weekly, we understand from a larger perspective, this zone is going to be heavy. So when we do contest this again, I would like to see a pullback, maybe a double bottom, and then I want to see trends reverse into a bullish trend on the upside. I don't want to play this based off like, oh, it's going to happen. I want to see trends reverse. If you're looking at this from a historical area, we're literally just bearish right now. We're trying to find a base where we're currently at right now. But the issue with that is there's not enough buying pressure to get this to break out yet. We're rejecting heavily at around $108 a share. So I want to see trends reverse. This is not going to be a play this week probably, because even if we do break up on the upside here, I still want to see a pullback on Nike back down to that support that used to be resistance. And I have a lot of lines here, so let me delete this right here. There we go. So if we do break out this orange line, I want to see us pull back and hold the resistance to support flip at this area. So I'm in no rush to catch stuff like this. That's one thing that I do when I chart, when I trade. I'm waiting. If a resistance breaks out, I want to see it hold this support when it pulls back. If it never pulls back, I'm looking at another stock. I'm not interested in chasing a play because that's not my style. If that's your style, you have to know what to do with that, and you have to know your risk. You have to know when to trim, etc., etc. So I'm switching over to PayPal now. And this is also another good example, just like how Nike, what I'm looking for with that. I may have to go to the weekly for this. So PayPal right now in the 4-hour, we're at a zone trying to hold trends basically. We hit a new support, obviously from, major gap down. Basically 10-point drop on PayPal, which is massive for a $70 stock. A $10 drop, that's pretty big, and that gap has to fill in the upside. If it doesn't, selling pressure break, could hit $55 a share down to $50 a share. As of now with PayPal, just like I told you with Nike, we broke on the upside. Since we broke where the resistance was, we're currently there trying to hold it as support now. Can we hold this as support for PayPal? Is the finance sector going to be hot this week? We don't know until we see. So PayPal is going to be a heavy watch to see if $63 a share can hold this support if we pull back. And at that point, if we do, we're going to have this gap fill open to the upside. So you have to understand risk with this. If you enter PayPal, you have to realize it may take a few days, it may take a week or so, it may take a month to fill that gap on the upside, but there's no rejection really in this area until we touch 71 a share. If you want to include this, you can, but I don't really see this being an issue around $68 to $69 a share. If PayPal can hold this and push up, volume and momentum is going to carry this right back up to 71 a share. So a brief summary, I'd like to see $63 a share hold as the new support, since before it was a rejection zone at these two areas. Now that we're broken above and pulling back, I want to see 63 a share hold as support. And if we do, the only break we need is $65.50 a share. If that level breaks, we're basically filling the gap up to $70 to $71 a share. So this is QCOM. Personally, I've never traded it, and I don't think I've ever charted it before, and I have not. So with stocks I've never looked at in my life, I always start on the weekly or the monthly just to get an overview on the larger picture. Where is a stock sitting? Is that all-time lows? Is it contesting all-time highs? I need an overview on the larger frames. So looking at this on the weekly, first thing I see, we formed a new support at roughly 102 to 104 a share. At that point, I know we could be going bullish, but look at the trends that we're forming on the downside. We're hitting lower highs and we're approaching that trend line reject. So I'm going to switch to the daily now to get a smaller frame picture on this. Can QCOM break out? I'm very big on, I don't like chasing breakouts. I don't like resistances. I want to catch the bottom and ride them up for calls. So knowing that I don't want to say missed because I never knew the stock was even around, I'm not focused on, I got to get the breakout. What's going to happen when we can test these levels on the trends for lower highs? Could we hold? Could we reject? Just looking at this right now, I see a very nice possible support area around this area right here if we have a pullback. And that's roughly around about $115 a share or so. That could act as a nice support zone if we pull back. I'm always focused on pullbacks. If your strategy is breakouts, that's fine. I'm going to keep repeating this so it gets stuck in your brain. Understand risk if you chase breakouts. If you play a breakout, understand your risk. A pullback to 115 will be a nice entry for this, because at that point, if you are wrong, a break on the downside of roughly 113 a share is going to be your cut level. So if we can hold a pullback around 115 a share, this could move upside into the gap fill of roughly 125 to 126 a share. Outside of that, I do not see much more that I can say since I don't really watch this stock very well. So 115 a share pullback is support. If we push upside, I could see a slight rejection at 125 a share. If 125 breaks, I could also see a next resistance at roughly 131 to 132 a share. So now I'm on Roblox, and this is kind of a good example with how Chevron is as well. We're zoning. Roblox is just in the zone. I think I said this last week as well, between $47 a share and roughly about $33 a share. It's just zoning up and down, up and down. Last week when I talked about this, I was telling you guys, if we pull back to the $38 a share, this has to hold support. If it doesn't hold support, we have a gap fill to the downside to $36.50 a share, and then the main support down to $33.50 a share. So with Roblox being right at that support I was telling you guys about around 38, this is going to be an eye watch throughout the week. Is Roblox going to sell off pre-market tomorrow? Could it have a huge wick and then push back up if it does touch $36.50 a share? I'm not really interested in a play like this only because we're in a zone. We're literally in the dead center of the top and the bottom for the main gap fills. So I'd like to see how this reacts. But if you guys need the levels, these are what I have right here. The main support, $33.50. The basically pullback, if you want to get calls, would be roughly $36.50 a share. The main support that I would like to see hold for strength is where it's at right now at roughly $38.30 a share. The gap fill to the upside is $41.80. If that level breaks, we should fill the top, which is roughly $45 to $46 a share on Roblox. So I am now on Starbucks, and this is also another heavy resistance zone I'm watching, just like how Nike is. We're basically holding a triple bottom on Starbucks if we can hold this level. It takes a few days or even a week or so to get that momentum to push it back upside. As you can tell from the last times they had these consolidations at that support zone. I'm not saying the support's going to hold. I'm not saying buy calls and you're going to make money. This is how probability is in your favor. You're looking at the overall picture on the larger frames and using that to your advantage. So if we do have a pullback to roughly $96.50 to $97, that has to hold support on any pullbacks. If Starbucks can hold those pullbacks, the gap fills to the upside are a lot greater for a reward compared to the risk on the downside if we do fail. You'll have a quick indication to get out of this position. And this is more so a swing play. This is not a day trade or like buying with the same week expiration. Starbucks takes time to move. It's one of those stocks. It doesn't move quick like Tesla or Amazon or Apple. This only moves a few dollars a day, if even a few cents a day, price per share wise. Main support, I want to see hold on this, like I was saying earlier, $96.50 up to $97. The heavy rejection of the consolidation at these triple bottoms is roughly $100 a share. And I'll put a level here just so it pops up on the side. Is roughly $100 a share. If that level can break on the upside, look for the gap fill to roughly 103 a share. And above that, we're looking at roughly 107 to 108 a share. Until then, this is just like an eye watcher. Look for the pullback if you want to play Starbucks. Look for the pullback to that blue highlight support. Don't think if it wicks heavy on the downside like it did back here, the trade's invalid. I don't want to risk it. Realize the lower something goes on a support zone, the cheaper the calls are going to be, which means you spend less money and you have less risk. Because if it doesn't hold at the bottom of the support, you're selling as soon as you want. That's when your risk tolerance comes in. Sell for a 10% loss, 20% loss, whatever you are comfortable with and what you figured out before entering this play. I like this setup a lot for a month out expiration or 2 months out. So now I am on shop and I'm on the daily time frame right now. Shop has been having that breakout momentum. We're holding trends. I know Jarvis has been watching this very, very closely, and I would not be surprised if he doesn't, or if he plays it this week. I'm honestly going to be waiting for it. Every time we pull back on shop, it holds the higher lows off these trends. The daily's off a little bit, so let me switch to the 4 hour. Should be a little bit more clear. So every pullback we have, these trends have been holding. The issue with that right now is we had a massive gap up and we pushed up to 65 a share, and now we're zoning. I was telling you guys last week for charting, $57.50 has to hold the support on any pullbacks. And the start of the week is where my cursor is right now. We never pulled all the way back to that support I wanted. We were very close, and we basically had a double bottom on Thursday before the push up on Friday, around $58 a share. At this point, just like how it is for, I think it was AMD we looked at, it's zoning and it's in the dead center. The main gap fill to 65 a share. If 65 can break on the upside, there's not much holding this back outside of $74 a share, maybe $70 a share. So a $5 push up on the upside if 65 a share can break. Looking at the downside, the only two levels I have, the major support I have is $57.50 a share. The new support, if we have a slight pullback, is roughly $60 a share for that center part to hold a support, making higher lows on this smaller trend line. It's also currently trying to cup and handle, maybe a bullfight on the larger frames. This could be a nice breakout play if the market gives us that sentiment throughout the week. So now it's time for snow for the person that was talking about this earlier. So I, as you can tell, traded this a lot back in the day. I was playing the trends on this back in 2021. So looking at it in the current time, currently, we are at a rejection zone. I'm on the daily. Notice how everything that I chart from a visual perspective off the jump, when I'm looking at stuff for the first time before even charting the smaller frames, I want a bigger picture as to what the heck is happening. I don't care about these 15 minutes. None of this matters until I know on the larger frames, where is the stock currently sitting based off historical price action. We have been rejecting this zone on snow multiple times. Why not the weekly? So you can use the weekly too. The weekly right here looks good. Obviously, we're rejecting, could pull back. We had a heavy red green, now we're red holding. The reason I'm on the daily is because I can see more fluctuation. If I'm on the weekly, it's kind of cluttered, if you ask me. Like, there's nothing wrong with it, how it looks here. It's forming that cup and handle possibly. We have a lot of rejections at this white highlight. But when I'm looking at the daily, I can see that area with multiple angles, if that makes sense. And continue asking questions as I talk because that makes this more interactive. And I want to answer questions more so just show my perspective because everyone trades different. Everyone looks at stuff different. Some people may not even look at the daily and they just go on the hourly and that's all they care about. Whether you're on the daily or the weekly you can see where these wicks are. But what exactly has happened within all of these wicks? That's why I go down to the daily. So I can still see everything within the zone. I can see the push and pull back, push, pull back. Snow's been having the same movement every time it touches roughly $180 to $185 a share. Sometimes it breaks out, but it doesn't hold very long. And when looking at what happened before we broke on the downside, we tried to hold a support right here. Tried to hold it, pushed up, came back down, and for literally 1, 2, 3, 4, 5, 6, 7, 8, about 11 days straight, we tried to hold support before we broke down. Now that we're in this, I don't want to say consolidation, but we're zoning right now on snow. We're trying to break upside. We're slowly making higher lows on the pullbacks, which is good because before we had this momentum, everything was lower highs and lower lows, straight bearish. So now that we're forming this new trend on the upside, we could be forming a breakout on snow. So this is going to be a stock to watch, obviously. For any pullbacks, the zones are very hard to pinpoint. But if I'm looking for a nice support, I'm just gauging candles, I'm gauging wicks, and I'll get a highlight just to show you guys why I put that level right there. Notice the rejections. Rejection on the daily, massive rejections. We wicked up but came right back down. Once we broke above, we rejected this and tried to hold the support. You can move this level anywhere. It's like I've said in past charting sessions, you're not putting levels based off like 159.92, 159.87. You just want like an average area. If you're looking at like all-time highs or like the week high, that is a pinpoint. But when looking for just zones, you just want to have an overall perspective in an area that's heavy. So when looking at the area with this 160 a share, basically, it's acting as a resistance and a support when above or below. It tries to hold within that zone. So anywhere in from 160 to 162 a share, that's going to be a nice support if snow can pull back to that area. And if we do pull back, we're going to keep those trends of higher lows. And also if we can pull back to 160 a share, 162, whatever you feel could be the area, if we break upside, can we make a new bullish trend with higher highs at that point? Currently, we're basically hitting a double top, trying to hold momentum. I would like to see a pullback to 162, 160 a share, anywhere in this area. Obviously, if we don't, we're going to hold support at roughly 167. And the reason I say that is because of the rejections and support that we've had historically. When we pushed upside, came down, we tried to break back up and reject it before the actual push. And then once we broke above over here, we held support outside of the major gap down, but we pushed back up. Now we're trying to hold that price action support at roughly 167 a share. So if snow can hold that slight pullback, that would be the nice area. But from my personal trading style, I would like to see a pullback to 160 to 162 a share. So what is the correct move if you buy at a level when news hits and or market sells off? Get out right away, or your rules kick in once you're down 20 to 30% on contracts, you're out anyways. So I'm trying to think of a good way to explain from my perspective. If news hits or the market's selling off when I'm in a play, you don't really know if the market's selling off until like the hourly fills on the candle or the daily finishes. So you can't really just say like, oh, the market's selling off, because if we go over to SPY, let's go to the hourly real quick. Is this considered a sell-off? SPY wicked up heavy to 430 a share, finished the day at roughly 426. Like, what's really a sell-off definition in your book? If I would ask anyone that, you don't really know what a sell-off is until a major support breaks. So if we're looking at SPY, like what Jarvis was saying earlier, that 220, I mean, the 425 to 426, if that breaks on the downside, that's going to give an indication that we could drop lower on the downside. But when looking at plays like snow or anything else, where is the downside like fill? Like, where is the level that if this breaks, it's going to keep going down? There's too much like movement. There's too much candles going on below 160 a share. There's not much area for this is going to sell off. So it's kind of hard to use a news release with your position. But if you ever question yourself when you're in a position, you should just sell right away. There shouldn't be an indication of like, oh, I'm down 30%, I'm just going to get out. Are you kind of like indecisive on holding it moving forward? Like, what's your mindset as you're in the play? If you're worried at any point when you're in a position, you should just sell right away and just take the emotions out of it. You should not ever feel worried if you're sized correctly for a position that you like. If there's a strong resistance and we knife through that, does that mean it's strong? And if the stock breaks and retests, won't that be a weak breakout compared? So let's go back to what's a good example. Let me see what Baba is looking like. Yeah, so say we like you're talking about if we break like an $86 this blue line, if we break upside and pull back, and say we don't hold and we break even lower. Oh, geez, I thought I can move that. There we go. And we break lower. That would show you a weak indication. But the biggest thing you have to realize, you're not buying. If it breaks out above the resistance and now it acts as a support on a pullback, you're not buying right when it touches. You're waiting to see if it holds price action. You're waiting to see if the volume comes in heavier as it contests that zone. It's not like you're buying because, oh, the zone touched, I have to get in. You want to wait for like an indication, basically backing up what you have on the chart. Volume, candles, is there reasoning behind why you should buy in? It's not just, oh, the level broke upside, it's pulling back, it's time for me to buy in now. You have to have other indications. If you're just playing the chart, that's fine, but then you have to understand where are you going to cut if it doesn't hold, if it pushes up higher, when are you going to take profit? That's when the mindset comes into play for stocks, which is very difficult for a lot of people. So I don't want to say like, if the resistance breaks heavily and it pulls back right away, it's not a failed breakout. It could just be a fake out. Maybe it wasn't even a breakout to begin with. On the smaller frames, it could have been, but on the larger frames, was it really a breakout above that level? If I go to the 30-minute on snow right here, and I'm going to move on after this. So we broke out of this level at the 167. A lot of people, yes, they play this and they make money on it, but if they swing this position, they're not gaining any value. I'm focused on the pullback. So when it touches this day at 167, okay, it's holding, it closed at that level. Let's see how tomorrow opens. Tomorrow opens, it opens up above, pulls back heavy, and then sends. I would enter based off the fact of it wicked at that level, it's showing buying pressure. I'm going to buy into this position. I'm not buying in right when it touches because then you have to hold it. Consolidation will kill the contract premium. I want a conclusion as to why I want to hold and or buy this position. So that next day, the day after that, however long it takes, I want to be convinced to start a position. I don't just want to enter just because my level was touched. So this is a pretty good example. Level breaks massively heavy, runs up to 173 a share, holds at that level the next day, now it pulls back to that now support. The very next day, it holds it open for about an hour and a half, and then it takes off on the upside. It's very hard to explain, and it's even harder to execute because emotions play a huge role in the idea of if you're on the smaller frame, like the 5-minute or the 10-minute, which a lot of people do, when you see heavy selling pressure like this, you're not interested in buying calls because your mindset's telling you, oh my gosh, look at all this red. I have to buy puts. Like I have to get puts before I miss out on this heavy drop. I'm focused on the larger picture of, are we approaching that zone? I mean, a good example would have been this heavy sell-off that happened on, was that Wednesday? Yeah, on Wednesday. Heavy sell-off, barely missed the level. The very next day, it holds that and it pushes right back off that level. Whatever you miss, if you want to consider it a missed position, you can always catch the reversal on it. A heavy sell-off, look to see where the heavy support is on the larger frame and play the push on the upside with the retraction it should have. So now I am on Square, and I'm going to start on the daily for this. Square is also basically the same setup that we're looking for with Nike and Starbucks and the other ones that we've looked at, with the same bullish trends reversing, making higher lows and higher highs. So Squares obviously will block, is in the finance sector. What is your current position size you trade with? So someone else said something target. I'll get the target after this one. So position size is not always consistent, but when I follow my quote unquote my normal sizing, I usually feel about $500 to $800 worth, because I like to hold and swing. If I'm scalping or day trading, I'll increase my size obviously, but I'm not focused on I'm up 20%, I have to get out. I'm focused on, okay, the chart's holding this level, we could push to the gap fill on the upside. So I'll size in based off the chart setup, not more so I have to get in before it's too late. Is the chart looking very bullish so I could easily hold this and add an extra week or so of time? I'm focused on deciding my position size as I see the chart form. So it's kind of like a huge group effort, you could say. Is the chart levels holding? Can I afford to put in this much money? Should I add a few weeks of time, which will make the contract cost more, so I can't size as heavy with the contract number amount? I put all that into consideration when I size, but average size is usually $500 to $800. That's usually my average. I recommend sizing 5 to 10% of your portfolio amount. If you want to size more, that's fine. Just understand the more you size, the heavier the risk is. So with Square, we hit a support and we're pushing to the upside. And just like with Nike and Starbucks, I want to see trends reverse. On the downside, we're hitting lower lows, lower highs. Now that we're flipping bullish, higher lows, higher highs. We are in a bullish trend right now, a rising wedge basically on Square, aka block. I'm going to keep saying Square until they change their initials. SQ, I'm going to keep saying Square. So as this is moving upside now, I'm looking at the 62 a share for a pullback as support. I want to see higher lows keep forming. I understand a lot of people are like, oh, what, we got a lot of rejections here. Why not play that as support right now? Well, block is literally sitting right at that zone. I don't want to play that until I see the market move a little bit on Monday or Tuesday. So if we get a nice pullback to 62 a share, Square could have a nice entry for calls around this level, which will also fill in the gap of the higher lows and then trends pushing back upside. So that is what I'd be focused on, a pullback on Square to 62 a share. If the 62 a share does happen, watch for the rejection above the previous high, which would be roughly around, it's basically the same area. 68 a share is roughly the gap fill. We had a rejection around $66.50 a share, but a pullback is what I would like to see. If you like the breakout, I would wait for a break above 68 a share before trading block with a contract of calls. So now going to target, I'm going to switch to the daily real quick, and I'm going to look at what Jordan said. I'm going to put your levels on this, Jordan, and we're going to go off that. So let me switch back to the 4 hour actually. Let me put your levels in. So you got one at 133.1. I'm just going to put in the rough area because I'm not going to go to pinpoint it that good. 126.72, which is basically the low from June 1st. That's perfect. So at this point with target, and just like what you said, Jordan, your levels are literally like the gap. If you guys are starting to realize gaps are the biggest thing that I play, it saves a lot of time with forcing plays that you know aren't tradable. This makes you wait when you have gaps. You have major zones only, and you're not putting zones like this. Like, oh, there's a level here, there's a level right here, there's a level down here too. I don't want to chart all that. It's a headache, and it makes you forget what the main zones are. So when looking at the gap fills from the main support to main resistance, it gives you conviction and not forced plays. And is target all-time lows? No. Okay, I was going to say. So looking at the weekly with target, the next major support we have is going to be roughly 121 to 122 a share. I'll make that blue so it stands out, and I'm going to go right back to the daily and the 4 hour. Going off target, you don't want to force any plays with this kind of stuff. We could keep pulling on the downside And if we do, I just put that one level in around 121 to 122 a share, which is about a $5 drop from where we currently are. There is not much indication as to what could happen with target. So do you want to force a play? Do you want to wait and see how this forms over the next few days to a few weeks? This is when patience comes into play. A lot of people, and I promise you at least half of you may be thinking this is going to tank. I have to get puts. You have to understand we are at a support, aka a double bottom. Yes, it could print, but you have to understand, do you want to risk that for your position? Personally, for me, if you miss this double top right here, you miss the put play. You miss the put on this basically $6 drop, $7 drop from that high. So I'm not focused on trying to catch the put on this break on the downside. You already missed that position. So I would just wait and see how this forms. And then as the days give me more price action, I can make a conviction idea as to like what could happen or what I could do with target. As of now, I don't recommend anything. Major support gap I have is roughly 122 a share. Just like Jordan said, around 126.76 area, which is basically this double bottom. That's going to be a heavy support. And the gap fill to the upside is roughly 133.1 a share. So to the person that sent all those tickers earlier, are there any specific ones that you want me to look at for you? We're basically past the hour class, but I will take a few more minutes to do stuff for you. Yeah, if you're on your fourth roll up for a put, Jordan, you're good. If you're on your roll ups like already, keep doing what you're doing just like you are. I was in AI at 28, news came, short seller was shorting it and went down to 16. I exit at 19.95 at a huge loss to my small account. I did not know the news till like 7 p.m. when I fell asleep. KK, what day? Do you remember what day that was? I'll pull up the chart for that right now. Whoa, this is a while ago. This is back in what, May, April, when you had that position. Okay, so if anyone else has any stocks you want me to look at, type them in the Zoom chat right now. But if not, this will be the last one. So let me just look at this real quick. Carvana. Oh man. 19.95. So you're basically looking at the main support right here. From what you're basically saying, around that $19 to $20 share area was that massive support level. We broke below that. This is a good example of how, I don't want to say this is the only thing that happens, but market makers and hedge funds use those heavy levels to break on the downside, find a new support, and then push it right back up. And I'm pretty sure if I put a level right here at this $17 share, I'll make this gold I'll make it red so it stands out better. And I'm going to go back a little bit. Notice how that $17 was a massive support back in what year was this? Mid 2022. Yes, there's a lot of price action breaks down, but overall it held this $17 to $17.50 a share area pretty heavily. So them breaking down the downside, that's why that held support right here. But going off of what you were saying, shorting it down to like 16, I exited 19. Did you exit at 19.95 before the break, or was it like it was pushing back up and you got out? I take it you sold before it actually hit that $16.75 area. So it was pushing back up and you got out. So what made you sell as it was pushing back up? Did you have shares or was an actual call contract with a lot of time on it? Shares. I was in lower 18. So the biggest thing I would say, I don't know if you're asking for like advice or anything. When I used to play shares, I don't play shares anymore, but I started off with penny stocks back in 2018. So I was familiar with shares before options. I would always use the larger frames. And if a heavy level broke and I was able to hold longer, I would find the next major support. So obviously on the daily, it's very difficult to see this is a hold point. But if you want to use it, you could. The 4 hour shows it a lot better. But after that broke happened, you sold on the upside. So what made you sell as it was pushing? Was it just the idea of like, this could, now that the support broke on the downside, this could act as a resistance, which it kind of did for a little bit. Or just wanted to go up. It did for a little bit before it actually broke up to the upside. The hardest thing about playing a position that you're down in, all you want to do is get out when it goes back to green. That's probably the hardest mental capacity to like fight when trading. When you're red, you just want to sell when green. And if you keep going down in red, you don't want to get out. So that makes perfect sense. The issue with like advice from a longtime trader called Ripster told me if it breaks 20, get out. And I was in it when it ran to 18, but the next day it ran up and okay. I exited. Yeah, so I can't really say much because I'm not familiar with the stock, but just going off price action wise, if you held it when it was down at 1680 area, I would have just held it until it came back down to that area. I mean, obviously, looking at what's happened, it's easier to say that than in the moment because if all we saw was this chart from where we see on my screen, you don't really know what's going to happen. And when it's contesting this historical support, which is now resistance, it can scare you out of a position. So I get that 100%. The best advice I can probably give, I mean, playing shares, it's easier to hold than options, obviously. But once it contested that area, I probably would have gotten shaken out to sell as well. So I can't really, I don't want to say bash you, but give my opinion because I probably would have done the same thing. The only issue is, did you FOMO into this after it broke out, or did you just watch it? I was margin call at the time since it came down 26 and then bought and helped it broke 20. Ooh. Yeah, so it's not too bad then. I mean, the only thing I can really say is trust yourself, trust the push. The hardest thing about holding a play when red is basically if it keeps going in the red, you just want to get out at that point because you don't want to lose any more money. I don't really have, I mean, Jarvis, or if you, Mitchell, if you can hear me and you have any advice on this, if not, just, you don't got to say anything. But basically, holding a position that went red and it's going back to green, shares or options. Well, if he's going to talk, I'm going to pull up Carvana real quick. CVM. Yeah, so I think he's just listening, I think. So Carvana, is this considered a meme stock? I don't know if anyone, I saw a group called TTG over at Torquay Traders said it was squeezed, but it's why I bought it. So yeah, I'm not very big on playing stuff that's hyped. I'm a very big believer in the fact of when stuff gets overhyped on social media, I just want to avoid it because at that point there's no analysis. You're just playing follow the leader. So I'm very, I mean, that's when like GameStop, AMC, uh, what like any of those. I never played those because I'm not big on following the crowd. I like to play my analysis. So when looking at a stock like Carvana right now, we had a huge push just for a huge sell off. So where's price action? Where's the support? If I'm looking for a support that I can give you or anyone else that may be interested, there's a nice support right here, roughly around, where's that at? About $16.50 a share. So about another $2 drop on the downside. I would look at for a position if you want to go shares or calls, whatever it may be. I am just not a very big fan of these kind of plays. That's just my issue. But that $16.50, that's a very nice area if we get a pullback. So that's one area I would be looking at right now. If you want to just follow and you get calls, add a lot of time because this could push, it could reject. Just make sure you size accordingly to your risk. Does anyone have any other stocks or anything before we call it quits for tonight? Rippy guy said ethically can no trade these stocks because they are pumping no money. Yeah, so also don't let the idea of like you have a small account so you have to play stuff that can go big because basically you're just trying to catch like the big fish, if that makes sense, which there's nothing wrong with that. But you have to understand that to grow a small account, you have to understand risk management and also the idea of like progress. If you just play hype stocks, which is fine, that's all you're going to be interested in doing is just buying and holding, buying and holding. If you have like a system, you can actually consistently grow the account and not just enter plays based off other people. I'm not saying you shouldn't do this. I'm just like, everything I say is like personal, like my personal bias, what I've been through. technical analysis and following your own system has a lot bigger effect than just playing stuff that other people are like, oh, you should buy this. Oh, it's trending on Twitter, get in before it's too late. You're not learning nothing. So long term, if you want to make trading work, you have to learn in the process and not just follow the crowd, because what are you really learning? Like, why not find a way to like get into this position before the breakout happened? Like, look at this heavy rejection right here. Heavy rejection. Once we broke above, look at the support. You could have entered here and just held that. $10 up to 27. So I'm always big on get in before people notice it. Get in before the breakout. Get in when everyone else is fearful. That's how I like to play stuff. I'm always way too early. Early as in you buy in, it keeps dropping, or early as in you like get in and sell, then it takes off like after you sell, basically. What makes you hold before it takes off, but when it takes off, you don't want to hold? Is there any reasoning behind that? And I think I'm gonna stop the recording, but I'll keep answering your questions since this is just charting stuff. Oh geez. Mitchell, if you can hear me, you gotta stop the recording. I can't do it. And I don't even know if it's been recording this whole time. I think it has been. Worried about margin calls. How much time do you add to your contracts? Oh, shares, always in shares. Yeah, so they're time's unlimited then. Let me pull up the Roblox chart real quick. Where at did this happen for you? I'm guessing it was back here before the takeoff. I'm gonna wait to see if you respond. Yeah, I sold at 20. Okay. Oh, this is before this then. This is even farther back. Let me go with the daily. Oh, so okay. I see now. So here's the thing. You played this before support formed, it looked like. I think this is back what in mid 2022. Yeah, that's what you just said. Was it December or was it midway through? Okay, so you were in back here then before the main support happened. So I can't really say much about that because the chart hadn't formed at the time. So you basically had no direction, I would say, as to what could happen. Obviously now it's starting to form a huge base at roughly 25 at the main support. Obviously from earlier, $33 a share is where I have my massive support if any pullback happens. The biggest thing I can give like advice for with you, playing shares is very easy compared to, also don't follow in what is it, inside buyers, all that kind of stuff. A lot of people have money to lose, if that makes sense. I'm not saying it's a bad idea, but I tend just to follow price action. A lot of people like Kathy Woods, hedge funds, institutions, they buy in and they hold for years because they see the long term. A lot of people can't hold that long and or hold in red. So when stuff forms out on a larger frame, like with Roblox now, it's forming a massive base, and at any point, this could break out heavy to the upside or the downside. I mean, we're literally in that position where this could push to the upside and possibly go back to the $50 share, if not to the 60s or 70s. So advice for holding, if you don't see a massive support, I would not look into buying shares and or contracts on anything, because the biggest like conviction for me when I enter a position is strength at a bottom for calls. If I see strength and I see the stock making headway to the upside, I want to catch the pullback on trends. I'm not worried about catching it in the moment. So like the best example I have is probably Ford, because this is one that I was playing up, down, up, down. But here's like a really good example. I'm going to go to the daily on this one right now. So when I'm looking at Ford right here, notice how all the highlights that I'm putting on right now, this one didn't touch completely, that one touched, that one touched. So when looking at this, I'm playing the gap fills, I'm playing the supports, I'm playing the rejections, whether it's calls, puts, or shares. I'm waiting this whole time. Obviously, if you're on like the 4 hour, it's not as clear, very choppy. Larger frames, if you want to hold longer for the bigger move, that's what I like to do. So like when I entered Ford before, where this purple highlight was, all I was looking for was the gap fill to right here. So that was where majority of my trims were happening. Once we broke that above, I left runners for the main breakout, which I sold at, I think, $13.50 for the contracts that I had. I'm always buying at the possible lows because when I'm buying forward at this purple highlight, my risk is literally going to be the previous higher low. One scale out. There we go. Previous higher low, which is right here. My risk is right there. So then at this point, if I buy in the purple and I sell with the white highlight when this breaks on the downside, if it pushes back up, I can't be upset because that was my plan. That was my execution for the position I was going to enter. You have to pre-plan what you want to do, if that makes sense. And I hope I'm not rambling too much that you're getting confused. Everything you do is based off levels. Buying and selling is based off levels. Watching the stock form is based off levels. So many people just want to play because they see green. If you look at 430-minute, so many people probably just, well, let's go to the 15-minute actually. People that see these run up, they're like, I got to get in, I got to get in. If I go to the 4-hour, I'm buying in when everyone else was probably thinking this is going to tank so bad. I bought in because my risk down here for calls is literally a break of this white highlight. If I buy calls up here expecting a breakout, say I would have bought into that on the first breakout right here. Boom, I buy in. I don't sell because I want more. It tanks the next day. I sell and I'm pissed off. The very next day, boom, sends like crazy for the next week and a half. I'm buying when people are fearful. I'm selling when people want to buy in. That is how I trade because my risk is small, my reward is bigger. Also, when people are buying in heavy on the breakout, I can leave runners and just not watch the stock because at that point, the main breakout happened, let the stock run how it wants to run. Does anyone have any questions over stuff I was just saying? Any last minute stocks or anything? Mitchell hasn't recording, so I cannot stop anything. I can just leave and that's it. There must be times where you got worked down. Yeah, bro, everyone gets worked down. Everyone loses. Everyone wins. I lose all the time. My risk is just small. That's all it is. If you want an example, I can give you one. Let me pull up Netflix. I'm not saying I'm 10 for 10 every time. I lose. I lose more than I win sometimes, but my losses are so small and my wins are so big that overall I am profitable. I can win 3 out of 10 and I'm still profitable for my trades because my risk is so small compared to my reward. So with Netflix, this was a few weeks ago when this trade happened. Not the recent one, but the one before. So this breakout that hit on Netflix, I bought into calls around this area for the week of. If you're looking at the dates, 23rd, 24, 25, 26, the next day or the next week was the expiration. My contracts I had, I think was like the 380s or 400s. 400 touched the following Monday. So my IV was destroyed. By the time Friday hit and this huge push happened, my contracts were basically like barely break even because the move that needed to happen, when you have a 400 strike and the price is at 360, it only pushed up $20 that day. That's a big push for Netflix, but my strike was way too far away at that point. I basically anticipated the move. If I would have added another week or two of time for that contract, it would have been perfect. But I didn't get wicked out, but I made time against me. So I basically lost the trade, and that was the end of it. If you want to look at an actual wick out, trying to find one. It's hard to find examples when they're so long ago. That is why I'm afraid of options timing so hard. If you trade options for the first time, add 2 to 3 months of expiration time and literally find stocks that cost under $100 a contract, play right at the money. If you want a list of stocks, I can type them up in the Discord after we're done with this. But when you first learn options, and I wish I would have known this, which is why I'm telling you, play contracts that are 2+ months out expiration. They're going to move very slow, but if you're used to playing shares that move 5% in let's say 1%, 2% a day, imagine playing an option with 2 to 3 months time and they're up 10% in a day, 15% in a day. I'm pretty sure you'd be pleased with that. Those are called 4DTE. I'm not sure what they're called. I know they're options. They're the ones that don't have the W next to them. July 21st, August 18th, September 15th, October 20th. When I swing, I'm always playing over 2 months out because the contracts move slower. So risk is minimal, reward is also minimal, but it gives me time to let the stock work its chart out. That's why when I played forward, and I keep going back to this, but it was probably one of the best trades I've had in the past few weeks. This was May 24th May 25th when I entered because the news with Tesla came out overnight and it pushed up heavy. May 25th, I got July 21st expirations. That's literally 2 months away. So I played a long ways out only because I played right at the money. The stock was around $11.40 when I bought in. I got the $12 strike price, which it was in the money the very next day. So I'm always playing at the money and I play months out. And I try to play contracts that are under $100 a piece because I don't want to put in $800 for one contract and I can't trim. I like the size 10 to 15 to 20 contracts, trim as it goes, leave runners with stop loss at break even. A lot are calling for SPY 10% pullback by January 2024. How would you select options for small account? So that's the thing. You said a lot of people are calling for SPY to drop. What's price action doing? You want to do what the chart tells you. Don't just follow the crowd. As hard as that is to do, you always want to play the chart and do what you see happen. If you follow other people and you win or lose, you don't learn anything. I had times where I had contracts and it did hit my sell point. There was no buyer there. If so you say it hits your sell point, there's no buyers. What do you mean by that? Oh wait. Aha.